So, good evening, everyone, once again. Please, I want to be sure I'm audible. Please kindly confirm you can hear my voice. Good evening, good evening, good evening. Thank you for joining. We want to actually let me start by appreciating God Almighty for the grace given unto us to actually see year 2026. You know, telling someone that is has not been by the grace of God, but God has been faithful to us. We really want to thank God Almighty. I also want to use this opportunity to also appreciate our facilitator for tonight. Thank you, Adeola, also for the recommendation, and thank you to our for accepting us. So actually give a short notice, and he decided to he will actually have us. Thank you very much, Mr. Simeon. I don't see some people who have joined this session. So, like I said, the new tax law is what we'll be talking about today, and it's a very, very important topic. There have been a lot of things online, a lot of things on status, a lot of things on Twitter. Different people are posting events, put description, put this, put that. I decide to keep me. Most of this, and I don't actually reply because I see ignorance. Many people don't even know, and also I come to realize that people are panic, people are afraid. I mean, Nigeria, we are not used to it. We have a lot of people that don't want to pay tax. That the fact they don't want to. A lot of fact they don't know about it. So this is coming to them as something that is new. So it's not something we are used to. And like I also put the other time that this tax of a thing is also spiritual, it's also scriptural. Like we see a case where Jesus had to pay tax in the Bible. You also have to tell disciples to go, Peter to be precise, go and bring money out of the mouth of the fish to pay tax. I also say that it's also constitutional. Tax is very constitutional. Like I say, it's section 24, like I read the other time. They actually talk about the obligation of a citizen to declare his tax honestly and to pay to the appropriate quarter. So without much ado, I'll just go straight to the point. Like I said, this is a webinar. Without much ado, I'll just go straight to the point. Let me acknowledge the presence of some leaders I've seen on the call that join us. I don't know if he's still on the call, Mr. Adekunle Adeyemo. He said he's a chartered, he's a tax consultant, and that is still here with us. He was a one-time chairman. I don't know if he's still one-time president of Charter is of Taxation of Nigeria, Ikorodu chapter. Also, is a fellow of Chartered is of Taxation of Nigeria. But tonight we have a wonderful resource person who will be taking us on tax this evening. Someone who I believe have the technical know of this we are going to be talking about. So I'm going to read his profile. Please kindly confirm if you can see my screen. If you can see my screen, anybody can just unmute and let me know to be sure that my screen is visible. So I want to read this profile. If you can see my screen, you can just let me know. Okay. I'm not getting. Okay, I think I can see my own screen from here. Okay, this is the profile of Mr. Simeon Charity Ojo profile. Simeon Charity Abiodun Ojo is a dynamic and result-oriented accounting professional with a Bachelor of Science in Accounting from Obafemi Awolowo University and multiple industry-recognized certifications, including the Associate Accounting Technician, that's AAT, from the Association of Accountancy Bodies of West Africa, ABWA, Certified Risk Technician, CRT, from the Association of Enterprise Risk Management Professional, ARMP, and guardian member NIM from the National Nigeria Institute of Management, NIM, with a strong foundation in financial reporting, budgeting, business development, and strategic planning. Simeon brings both analytical depth and practical experience to every role he undertakes. He is currently employed as a tax auditor at GFAMS Consulting a position he began in 2025. In this role, is the he run the tax activities, filing of tax computation, tax audit, tax debt reviews, client relationship, etc. for the Lagos office, ensuring appropriate compliance with all relevant tax laws and authorities, and making sure tax are paid in due time so as not to incur penalties or interest. Also, okay, sorry. Okay, it took he worked remotely as a finance assistant at AA Akiode and Co, a position he began in 2024. Sorry, my screen is, I think it's my network. Okay. QuickBooks, Sage, Microsoft Office Suite, Atlassian Jira, and Google Suite, and continues to sharpen his skills through ongoing professional development. With a blend of hand-on experience, academic knowledge, and a heart for social impact, Simeon Charity Abiodun Ojo is committed to using finance as a tool to drive sustainable growth and operational excellence in both corporate and non-profit sectors. So everyone, please, you can do a thumb up as I welcome our facilitator for tonight in person of Mr. Simeon. Over to you, Mr. Simeon Charity Ojo. Thank you.
Good evening. Can everyone hear me?
Loud and clear. Can you hear me? Loud and clear?
It's going to be a very inspiring one. We have very limited time and we'll be going through things as fast as possible so that we can get to the question and answer point where people can ask what they've heard, what they think, and what do they think they should do in regards with the new tax act that has started by the 1st of January. So I'll be sharing my screen. I'll be using the slides I used in a webinar I did in December, which the resource will also be available to everyone in this meeting. Please, I think I sent the link to our host. So please, if you can help me put it in the comment section so you can just fill up the Google form link. I'll be sending it. I'll be sending the resources and everything tomorrow to everyone that fill up the link so that they can have access to the full slide, because the slide that I made was for the four tax acts, which is the JRB, the Joint Revenue Board Act, the um, JRB, the Nigerian Revenue Service Act, the Nigerian Tax Administration Act, and the Nigerian Tax Act. But for this webinar, we'll be talking specifically on the Nigerian Tax Act, which it covers all the taxes basically that relates with every individual or corporate person here. So please, I'll be sharing my screen now. Please, I want you to let me know once you can see my screen. Please, can someone else confirm if they can hear me?
Yes, good evening. I can hear you.
Okay.
Yeah, can you hear loud and clear?
Thank you. So, the progressive taxes where the low income earners are taxed less and the high income earners are taxed more. Why a proportional tax is where everybody is taxed equally? Let's say something like 5%. So everybody is taxed equally on that rate. And a regressive tax is where the low income earners are taxed more and the high income earners are taxed less. So now from there, what do we aim to gain basically from this particular session? For me, I feel this session is to gain clarity on this new tax act, and most importantly, use it to our advantage to ensure that number one, we are compliant, which is the main thing when it comes to tax. Compliance is key, because not complying will cost you a whole lot more than um, complying. Now, so we need to be compliant with what the law says, and then we need to also teach others the truth about the tax law, how it affects them, and everything. So now we'll be talking straight on the Nigerian Tax Act, and we'll be wondering why did they bring in this? Why did they bring in this Tax Act now? Why are they doing these reforms, the tax reforms, and everything? Well, one of the major reasons that I feel this reform is very, very beneficial is because it is um so why are they bringing these new reforms and everything? Well, basically there are a lot of taxes from ranging from the federal to the states to the local government. We found that we have a whole lot of taxes, over 50 different taxes. So based on this multiplicity of taxes, one of the main aims for this is to bring about the harmonization of the taxes, and then to bring about accountability and the likes, in order to ensure that tax is effectively gotten, then the cost of getting the tax is less than the actual tax that is gotten. And then, so that was what brought about the Presidential Fiscal Policy and Tax Reform Committee, which is spearheaded by Mr. Taiwo Yedele, which are the ones that talked on and brought about this tax act, the four tax act actually, that was ratified. Two of them, which is the Joint Revenue Board Act 2025 and the Nigerian Revenue Service Act 2025, Nigerian Tax Act, they are the ones that became effective January 1st. So basically, so we can see these are quite a number of taxes from the federal government to the state government to the local government. A lot of taxes. And that's why we will see the recent JRB communique that came out talking about this tax on transportation that is being gotten from people, especially those of us in Lagos. You see how all these drivers, they pay a lot per bus stop and the likes. Is bringing harmonization, but we want to see how they will effect it. We want to see the effectiveness of such. So we have quite a number of common misconceptions. Actually, there's no new tax that have been brought. Most of them existed. They just changed some rates, they changed some percentage, and the likes. Your bank account will not be debited, and small businesses actually will enjoy more relief. States will be treated more fairly. I think yesterday or today they were talking about the VAT, and we'll see that there's a new VAT sharing formula, because I think the percentage going to the federal government have reduced by 5%, and that's going to the state have increased by 5%. So states are more fairly treated in this new tax act. And most investors will be exempted, of course, from the tax on capital gains. Minimum wages are exempt. Minimum wage earners are exempted from payee, and the rest. So I'll go straight to the one we are dealing in, which is the Nigerian Tax Act. Okay, please, I want to confirm if you hear me.
Yes, we can. Yes, sir.
Okay, so please, I'm trying to get to the slide that talks about. Okay, so we are talking about the Nigerian Tax Act 2025, and the goal of the objective of this act basically is to provide a unified fiscal legislation governing taxation in Nigeria and replacing fragmented laws. And it applies to all individuals, companies, trustees, incorporated trustees, um, non foreign companies, everyone. And it repels multiple acts. We have the CITA, we have the CITA is the company income tax, we have the personal income tax, we have the petroleum profit tax, we have the value added tax, we have the stamp duty tax. Each of these taxes had their own establishment act individually. So what the new tax act did is consolidate all of them into a single act, which is now the Nigerian Tax Act. So um, okay, let's start with the taxation of the income of persons. Now, no, one of the first things we have to understand when it comes to the taxation of the income of persons is it is charged on the income of every individual, trust, estate, companies, anybody that can be recognized company, your company is separate so individual like you yourself personally, because a business name doesn't pay company income tax, they are charged based on the personal income tax. Now, one of the first key things when it comes to taxation is to determine the um, residency of an individual to be resident in Nigeria, or if you are, let's say, a foreigner and then you spend Nigeria is regarded Nigeria based on their income in Nigeria, foreign, a non-resident, but they are also expected in Nigeria. So you can tied to Nigeria and your residency is stated to be Nigeria, you will be taxed under this part of the act. One of the main things when it comes to employees is that it is the responsibility of your employer to remit your tax on your behalf. That's what we call the payee, which is the pay as you earn. In which if your employer doesn't deduct it, it will be penalized, and this is always remitted before the 10th of the next month to the state internal revenue service. Now, one of the main things are the reliefs that is attached to the income of individuals. We can see that um, under the previous Tax Act, most of these relief exist. We can see them in form of the consolidated relief, which is the one of 20% of your gross income plus either 1% of your gross income or 200,000. The higher of it is what you call your consolidated relief, which has now been removed in this new tax law and replaced with the rent relief, which is 20% of your annually rent paid, up to a maximum of 500,000. So that means if you pay a rent of 1 million, you can claim a rent relief of 200,000. And if you pay a rent of 2 million, you claim 400,000. Whereas if you pay a rent of 2.5 million, you claim 500,000. Anything above 2.5 million, you can't claim beyond that. You can't claim the 20% again. You will only claim a maximum of 500,000. Another relief that is given to the taxation of individuals is the life assurance. So if you are paying a life assurance for yourself or for your spouse, it can be deducted your from your personal your gross income rather. Your pension also, which is 8% of your basic housing and transport. 8% of it is deductible, and then your national health insurance scheme. This one mostly is for public sector. Is mostly paid by public sector people. Most of the um, private sector will make use of private we make use of private insurance schemes. So another thing is the National Housing Fund, which is mostly for the public service officers also, except individuals who feel like contributing also to the NHIS. So these are allowable deductions from your gross income to be able to get access to your taxable income. It is now on the taxable income that your the tax will now be calculated upon, in which the first 800 is exempted. So I'm trying to get the template so that I can do a practice for us along the way to see the difference between the previous tax law and the difference with the new tax law, which I will actually do before the end of this particular section, because it's key for people to see the basic changes that would occur in these scenarios. Now, when we now begin to talk about valuation of the benefits in kind, valuation of the benefits in kind is whereby an employer gives you benefits, but they are not cash. For instance, your employer rents an apartment for you. So you see a job opportunity and they said accommodation is available. Now, if we are given an accommodation, the value of that benefit in kind is expected to be added to your gross income, and then you have a relief of 20% of it. And then if they give you some kind of assets, 5% of the cost of the asset that is given to you, is expected to be added to your gross income also. Now there are exemptions to this benefit in kind. We have things like the things like they give you uniforms, they are giving you daily feeding in your workplace. You know, some workplace they give lunch they provide lunch for their staff, and then relocation costs, all those basic things, which are basic things that the an employer should do for their employee, are exempted from being added to your gross income, in which your reliefs will now be deducted to get your taxable income. So basically, you are not charged on your gross income, you are charged on your taxable income. Now, what's the difference between that gross income and taxable income? The difference is basically that your gross income is the total amount of money that you make in a year, in a month, and then your taxable income is the amount on which you will actually be taxed, which is after deducting every form of relief that you can claim. So after deducting all those relief that you can claim, then your taxable, you will arrive at your taxable income, in which the tax income band and the rate will now apply to. So what does that mean basically? Firstly, your first 800,000 of your taxable income will be charged at 0%. Then the next 2.2 will be taxed at 15%. And then the next 9 million will be taxed at 18%. The next 13 million will be taxed at 21%. The next 25 million will be taxed at 23%. And the next 50 and above 50 million rather, above 50 million will be taxed at 25%. So the maximum tax rate here is 25%. Whereas in the previous tax law, the maximum tax rate was 24%. So now, if we now say minimum wage earners are those that earn 70,000 naira per month and below, which means if I earn 70,000 naira per month, I am expected to that means my total income rather for the year would be 840,000 naira, which means if we look at it this way, I'm expected to have 40,000 naira left, which should be taxed. But even before this new tax act came, a provision from the Finance Act already stated that anybody earning minimum wage or less is fully exempt from this income tax. So what I'll do now is I would stop sharing my screen. I would share my screen on another laptop in which I would use to do a sample of the new tax law on an Excel sheet I have here, and then um, do the previous tax law also on the Excel sheet. So let me stop sharing my screen here so that I can stay on this other device. Please, I want you to confirm if you can see the screen.
It's still coming up.
It's coming up.
I think the system just went off. I think it wasn't fully charged before. So I'll get it to this system and I will practice the template. But let me continue here. Let me continue here. So like I said earlier, the
Your screen
the
is up now.
employer, yes, these are not these the one I'm using to do this presentation. Can you see it? So the employer is the one that is charged with the need to file, to deduct and file the tax for his employees, whereas an individual which is not under any form of employment, which means you are self-employed, a freelancer, you yourself you're expected to to go and um, make a self report to the relevant tax officials, and then the report you once you make the report, then you file and pay for the tax. Now, in the scenario where um your income is not being able to be ascertained mostly for people in the informal sector, we do what they call the presumptive tax. This is whereby um, the tax official come and say, okay, we believe you earned this amount of money this year. This will be your tax. And then the individual debates and say, "Oh, I'm not sure I earned that amount." Of course, um, you can always liaise with your tax officer, because every individual has a tax officer. You can always liaise with your tax officer, in which you will come to a conclusion and say, okay, this is the amount that will come, okay, pay this amount, and then that will be your tax for the year. But a presumptive tax is expected to be fair. And one of the parts in the JRB Act that I didn't talk on is where you have the tax ombuds. That's a new initiative by the new tax, by the Act, which gives you the ability um, to be able to, they will be able to help you liaise with tax authorities when you have issues like this. And I think that initiative would be one of the best for the informal sectors wherever the tax officials are bringing tax that not or for what an individual can say he or she earns. So that's where the presumptive tax coming. And like I said, you can always object to assessment. You can tell them, when I myself, I'm not sure I earned that particular type of money. So basically, you can always object. You can always object to whatever tax is given to you, and then as you go back and forth, you come to a conclusion. And in the process where no conclusion is made, no agreement is made, of course, you can make use of the tax tribunal where you go, they listen to your case, you present your evidence. The tax authority also presents the evidence, because one of the main things that you have to be very keen on is the best of judgment assessment that is always brought by tax officials. Best of judgment needs to be backed up by evidence. If you show them evidence, they expect to reduce their best of judgment decision. And then if there's no agreement, like I said, you can go to the tax tribunal. If the ruling of the tax tribunal doesn't favor you, you can take it to the Federal High Court, and then to the Appeal Court, and then to the Supreme Court, which gives the final judgment. The same way that's the same way the governments themselves can say, okay, we disagree with this, we disagree with the ruling of the tribunal, and we will take you to court also, and we will ensure that you pay the tax that you are expected to pay, that we are saying you should pay. So everybody has that same process of fighting for their rights in order to pay the minimum tax possible. Another thing that is exempted when it comes to personal income tax is your gratuity, your pension. They are all exempted from personal income tax. Compensation for loss of office. So let's say they are giving you, they sacked you and they are paying you some amount of money. They are exempted. But I think it is capped at a particular rate. I think 15 million, I'm not too sure. But you'll be paying a capital, you'll be paying a tax on anything above that. Then your foreign income that has already been taxed outside, and that's where the issue of double taxation comes in. You can't be taxed on an income that has already been taxed from the country that it is coming in from. And that means you have to bring it through approved channels. Then, of course, military officers are all exempted from tax. Military officers are all exempted from tax. So basically, I would reshare my screen to another one, but I will only be able to practice with the new tax act. So this is a simple template for an income, and it shows you all the relief from the pension year to the NHI, to the NHF, to the life assurance. The only thing that is missing here is that should be the interest. Yes, I think I forgot it. Interest on loan of owner occupied house. So if you are a owner of a house and you take an interest on loan, a interest, let's say, that is related to that house, let's say you want to furnish it, you want to make some repairs, the interest on that loan you can claim it as a relief for your gross income. So you can claim that interest. But the moment you are claiming that, of course, you can't claim rent relief, because once you are a owner occupied, you own a house, you can't claim rent relief. It's only for people renting. So let's give an example of somebody that is earning the minimum amount, not minimum amount, but most people earn around 150,000. So if you earn 150,000 monthly, that means annually you earn 1.8 million. Please, I want to be sure if you can see my screen, if you can see what I'm doing perfectly. Okay, thank you. Now, these are the list of other things, but it varies on companies. Some other people have more allowances. Now, I was talking about benefits in kind. So when you calculate your benefits in kind, they add it to the income here, because benefits in kind is going to be calculated as part of your gross income. So your gross income is the total amount of all the money you are earning. Now, then you can claim a rent relief of 20%. So here, based on this template now, you can just come in and say, okay, my rent, let's say you pay a rent of 750,000 yearly. So you can claim to a maximum of 150,000. But for this example, I'll go basically with zero. Let's say you're not claiming any rent relief, because we are doing annual filing for those that own companies or organizations and the likes, or businesses. One of the key things you have to be very conversant with is the compliance for this January. You have to do your annual filing of all the taxes you paid for on your employees throughout last year, and then you have to do your projection filing and everything. And one of the messages that the LRS, the Lagos State, has been sending this between December to this January on this compliance has been, if you have an employee, they have to bring in their receipts. At the same time, they will also ask for information in regards to the owner of the house. What's the name of the owner? Is it an individual? Is it a corporate? If it's a corporate, it's very easy. But an individual, no. Now we are talking reality, because now they will ask for the owner and they will ask for the tax ID of the owner. Because when you are claiming rent, the owner also is seen as an income to the owner. Now, how many house owners will want to give you their tax ID and all those infos? But that's by the way. So let's claim that you are not paying any rent. And let's also believe in your company, probably you are not paying any form of pension, NHIS, NHF, you don't have anything. So that means your taxable income is also 1.8. Now, let's say you are paying pension. That means in a year you are contributing 144,000 of your income to pension. Now, your taxable income reduces from 1.8 to 1.656, which is what the tax rate will now be compiled on. But let's assume that you are not paying. So that means your taxable income is also 1.8. What does that mean? That means your first 800 of 1.8 is exempt, 0, 0. Then that means we are left with 1 million, which will now be charged at 15%. And then you are expected to pay 150,000 as your tax for the year, which is 12,500. And your effective tax rate, that means you are paying 8% of your income. That's why the 1.8, the gross income, as tax. So when we come here and we talk about your take home, so you earn 150, you have no deduction, your pension and the like, you are not deducting anything. You don't have any loan. Let's assume you don't have any loan. Then you pay your payee of 12,500, and your take home will be 137,500 monthly. That's on the basis of if you don't have any relief to claim. But let's say you are contributing to pension now, then your tax reduces to 10,700, and your take home will be 127,300 because you are contributing 12,000, which is 8% of your income, to the pension people, and your employer, of course, will contribute 10%. So now I'll switch my screen back. So that's basically how it will be computed, and you can do them. Now let's move to companies. Now, for companies, you will be charged whether you are a resident or you are not a resident. We actually have what we call the company income tax, into bracket, significant economic presence act. So what this does is talking about non-resident companies. They don't have any establishment in Nigeria, but they have a significant economic presence. Let me give an example. Dangote bought 4,000 CNG trucks. The China company that did that transaction already has a significant economic presence in Nigeria, which means it will be taxed in Nigeria, but not CIT. Non-resident taxes are mostly final on the withholding tax. So let's say they did the whole deal and everything is like $100 billion. Example, the withholding tax says they should deduct 10%. So the company, so Dangote that should be $90 billion. And the $10 billion will be a tax remitted to the Nigerian government, which will be the final tax for that non-resident company that is supplying a resident company or individual in Nigeria, because the person already has a significant economic presence. The same goes for professional services. When you are offering let's say I'm based in Ghana, I have an accounting firm in Ghana. I got a accounting client in a firm, a company client in Nigeria. Then the Nigeria client is expected to deduct withholding tax from me, which will be my final tax in the country. So a non-resident person is also expected to register. So now, please, you are not charged on your income, you are not charged on your capital, you are charged on your profits and whatever gain that comes from it, such as dividend, interest, royalties, and the likes. So now, the capital income tax rate is 30%. It is expected to be reduced to 25% on order by the Minister of Finance to the President, which we approve it. And we hope to see that soon, even though I don't want our hopes to be high yet until they can see how effective they can derive income from this tax act. Now, in the previous law, a small company is a company whose income is 25 million and below. A middle company is a company whose income is 100 million, less than 100 million, and greater than 25 million. Now, under the previous tax act, a small company which is 25 million below pays 0% tax, and a medium company pays 20% tax, and a large company pays 30% tax. Now, under this new tax law, a small company has been increased to a company whose income is 100 million below, and that's the asset of 250 million, and their tax remains 0%, while a large company, anything above 100 million in income, you pay the standard 30%. Now, one of the loveliest things about this new tax law is In the previous tax law, if you make a loss and you are not a small company, because small companies are exempted totally, even from other taxes like the education tax, the police trust fund, and the likes. If you're a large company and you make a loss, you are still expected to pay 0.5% of your total income. Now you've made loss, so they can't charge it on loss. They charge it on your revenue, which is your sales. You are expected to pay 0.5% of your revenue as tax, which is what we call the minimum tax. The same thing applies to PIT also. If you are earning above the minimum wage in the previous tax law, you will pay your tax, but if your tax is less than 1% of your gross income, not taxable income, gross income, you will pay 1%, that 1%. But if your tax is greater than it, you pay your tax amount. But this new tax law has scrapped all those minimum tax. The only minimum tax we have is what we call the global minimum tax. Now, the global minimum tax is a tax on multinational companies. We call them the MNEs, the multinational enterprises. And this particular tax law is because Nigeria is subscribed to the OECD regulation. This regulation states that a multinational enterprise should pay a minimum tax in which of 15%. What does this mean? Before, in the previous tax act, I think it's around $50 million, but now I think they've increased it. Once your turnover is greater than or equals to 750 million euros, or greater than or equals to 50 billion naira, you fall into what we call the multinational enterprise, and then you are expected to pay 15%. So what does this mean? If you're a multinational enterprise and all the tax that your group have paid is less than 15% of your income, you are expected to top it up. So let's say you made 100 billion naira. Your turnover is like 100 billion naira. And then your tax is 30 billion. And we calculate, your profit is 30 billion. We calculate the 30% on your profits, which means 9 billion naira. Now, 9 billion naira is less than an effective tax rate of 15%, which means you are expected to top it up to the point where your effective rate will now be 15% of your net income. So that's basically for the multinational groups. And that's because the Nigeria is subscribed to the OECD regulations on multinationals. So now, for a company, how do you determine your accessible profit? Don't forget, when we're talking about PIT, we're talking about your gross income and then your taxable income. The same thing happens. You have your revenue, you have your accessible profit. From your accessible profit, we get your taxable profit. What does this mean? You sold goods of 10 million naira. Your cost of sales, probably 7 million naira. You have 3 million naira left. Rent, employees, other expenses, let's say everything 2.5 million. Your profit is 500,000. That's your accessible profit. Now we work it to get your taxable profit. So From your accessible profit, if you have a loss relief, for instance, MTN claimed loss of some million naira in 2024 and based on their 2024 ending. This year, they can carry that loss relief into this year. So as companies, you have other disallowable, not all your expenses are disallowed, are allowed rather. So things on capital expenditure, cost of acquiring, of course not, but you can claim the capital allowance, your depreciation, it will be added back to your profit, your taxes will be added back, payment of what approved pensions, management fees, and all those things, those are disallowable deductions. So once you remove your allowable deductions, you have your profits, you remove your capital allowance and everything, then the total of after all these deductions is what we now call your taxable profit, in which you will now pay 30% on. Now, some entities are exempted from company income tax. These are entities such as cooperative societies, charitable institutions such as church, trade unions. Anyway, any business that is not for profit, that means you are registered with the CAC as an incorporated trustee. You are not doing business. You are either doing a charitable work or something. You are exempted from CITN. Then new agricultural companies, like I said, small companies also, they are all exempted. Even for the new agricultural companies, these fall under what we call the list of pioneer status companies. So pioneer status companies are companies that are they are under the Pioneer Status Act, and they process specific sectors, things like agriculture, things like sustainable energy, things like LNG, gas, all those things. Companies in those instances, they are given tax exemption for 5 years, some for 3 years and the likes. Also, even companies that fall under OEMs, that original equipment manufacturers or ODM, original design manufacturers, they also have their own exemptions. So tech companies also, all of them, they fall in the pioneer status line. They are given exemption for, I think, a maximum of 5 years. So you can get the Pioneer Status Act and just read in line with that, see if your business falls under that and you can be exempted from it. So a company is expected to file their return within 6 months and make payment also. Except we are not talking about petroleum companies though, because that one is 5 months. So now, okay, we talked on allowances. So basically, these are the full list of assets you can get that you get capital allowance. So the condition for getting it is the company must own the asset and then you must use it for the purpose of trade. And then all VATs must have been paid. And then if it is the asset that is used partly and the other for, let's say you have a business, a building now, and it's also your residence. So you ensure that you apportion the part that belongs to the business and the part that belongs to you individually. And then upon disposal, there's a balancing charge or balancing allowance is calculated at the tax written down value. So um, capital allowance falls under three classes. We have the 10%, we have the 20%, we have the 25%. So motor vehicle software, other capital expenditures are 25%. Plants, agricultural equipment, furniture and fittings, they are 20% yearly. Building, agricultural expenditure, intangible asset, heavy transportation, these are 10%. And then you are expected to keep at least 1% of the cost until the asset is disposed of. So the total allowance claimed, you cannot claim more than 99% of the cost of any asset. So if you put it and okay, is what we are doing over a period, okay, it's going to be over a period of 10 years and the likes. Whatever capital allowance you are claiming is up to a maximum of 99%. Why for the petroleum part, they have their own aspects. I will not be covering that in this uh, particular section. Now, another key tax for companies is the development levy. Now, for those that operate a company before and they've seen how they do their tax, you will know when you are filing for your CIT, you're also paying your EDT, education tax, which goes for TET fund. You pay for your police trust fund. You also have other levies like NASENI for those in banking industry. Is it banking? No, I think those in oil related industries, technology. We also have NITS that all of them, those levies exist. So what they did is they consolidated those levies. So for instance, the EDC tax is 3%, the police trust fund is I think 0.0005% of your taxable profit and everything. So they consolidated everything together and said, okay, instead of paying this separate tax, you are paying a development levy of 4%. So everything combined together is now 4%. Now, small companies, of course, you are exempted from it. Non-resident companies, as I said, most non-resident companies, their final tax ends at the withhold service. And then, like I said, you can see the development levy. They've shown how they will distribute it. 50% will go to test fund, 15% will go to the education loan fund, and NELF, the defense, NITDA, NASENI, National Cyber Security Fund, and then Board for Technological Innovation. And then for the part that goes to the defense, this is how they will be sharing it across all the defense industry. Now, another thing I want to specify on is capital gains tax. Which is basically on gains made probably from the sales of stocks, from the sales of assets. So it is 30%. And there are exemptions though, especially I think the one that interests most is the stocks. When you make a stock sale of below 150, they are exempted from capital gain tax. Once it's 150 million and above, you pay 30%. But if you reinvest that money within that same year, that's 31st or latest on 31st, of course, you'll be exempted from that particular tax. So that's most of the things on the capital gain tax. And of course, your VAT is 7.5%. It is taxable on goods in Nigeria. And if a non-resident supply goods to Nigeria, they must also tax VAT and remit it to the government. And basically, now you can claim your input tax back from the government. It can either be deducted from output VAT or you can get the refund back. So that's the new thing. So I think they are still processing on the refund, how people can get the money themselves back. So these are items that are exempted from VAT: agricultural, baby products, land and building. All these things are exempted from tax. Whereas we also have medical supply, education, energy, electric vehicles. Those ones are charged at 0%. And currently we have tax suspended on the petroleum products, renewable energy equipment, compressed, and the CNG. So basically that is another key thing I want to mention is the stamp duty. Stamp duty is basically a tax on to make whatever transaction you are doing legal. Because if your document is not stamped, it is not allowable in the court of law. That's why legal agreements must be stamped. They all have their rates. Contracts must be stamped. Loan, they are stamped. All of them, different instruments must be stamped at their rate. And the most important is the electronic money transfer levy. So these are the rates. We have the electronic money transfer level is the 15 that you are being charged on your bank account. So it's not being, you're not going to be charged on your bank balance, but on the amount you send. So if you send 10,000 and above, before the recipient we pay the 15, but now the sender is the one that would pay the 15 charge on it. So shares and all these things, they are all exempted from stamp duty. So I think this is basically, so if you register with the link, I will send you the resource. You will see it more. There are different tax incentives that cover, this one covers both businesses, individuals, and the likes that you can get under the new tax act, and then you can use it to your benefit. So basically, that would be all. Thank you so much. God bless.
Thank you, thank you, thank you, thank you, thank you, thank you very much. Thank you, Mr. Simeon. That's a wonderful session. Thank you. We really want to appreciate you. So, and I want to encourage as many as if you're on this call and you did not make use of the Google form, you not register on the one, please kindly do so that you can have access to the material as he promised. So it's only the information on the Google form that you'll be able to use to send to us. Thank you very much. This is actually holistic and it's very, very broad. Thank you for taking us through the personal income tax, even company, even making us to know how our companies are taxed. So I think now I can go to a company and say, I know how you people are taxed. You can't be using tax to be deceiving us. So we know that you will have given us our salary before the remaining one is now your taxable. Thank you very much. So I want us to actually the question. If you have any question, kindly raise up your hand. I have one. If you have any question, please you can raise up your hand.
So you can kindly raise up your hand. I will open a queue from there and we'll start picking up the questions.
All right. Okay. So if you're having a question, okay, let me ask my own question. Okay. So my question is that I know yes, I pay my tax. I see it in the payroll every month. How much being deducted in my tax? So I want a clarification on one. So for someone like me, I want to know where is my tax being paid to? Is it to LIRS or to the joint tax board, this JTB? I remember at a point in time I put a document where my thing is required, so I was able to actually cover my thing using the joint tax board. This thing, I now noticed that my tax ID there is different from that of LIRS, and how did so there was a guy in my area that needed to access a public Lagos State building, and LRS is needed. The guy just come to me that, well, since you work in a corporate organization, I should have tax that they need my LRS. Unfortunately, the guy could not make use of my LRS thing to actually assess that bill. That like, is it that LRS is for only Lagos staff? So I want to know, like this new tax law, is there a kind of harmonization between the joint tax board and LRS? Does that mean that my tax is now being paid? So the thought I'm being paid, that is being deducted in my salary now, is it for the two? Whereby that other guy now, if he needs something like that, I can be able to provide him with my thing and be able to access wherever I want to access. So I don't know if you get my question.
Okay. Well, basically, I understand your question now. For the TIN, which is the tax identification number, is quite different from your tax ID. Your TIN is what you are used to, is connected with both the federal and the state. And the JRB, the JTB has been changed to JRB, because Joint Tax Board now is the Joint Revenue Board. Their duty is not even to collect tax. Their duty is to stand as intermediary between federal government and the state government internal revenue service, which is the NRS and LRS, and of course every other state internal revenue service. So they are for harmonization of tax, harmonization of tax identity number. So you will also see that this year, I think everybody's thing has been changed. You can go to taxid.nrs.gov.ng, put in your N9 or your N9 or the N9 auth code, and you will get your tax identification number there automatically. Or if you have the N9 AUTH app on your phone and you log in normally, if you go to your profile, you see your thing there. So you can get your thing there. But when you are registering with a state, the state itself also gives you your ID to know, okay, this person with us in the state. And your payee, personal income tax, is paid to the state. So the VAT, the CIT, the withholding tax, the stamp duty, those are federal government taxes. The states are the ones that collect consumption tax, they collect payee, they collect personal income for those that are not employees, but probably they have their own business, or you are registered as a business name. You register your business as a business name and not a company limited by shares. Then you have to pay personal income tax on your profit, not company income tax. So you remit those things to the state. They collect various taxes. The taxes are a lot. So those ones are the ones that are paid to the state. There's also the local government one. So your payee is paid to the state. So whenever you want to access the LRS, you access the LRS with your tax ID.
Okay.
So you access the LRS with your tax ID. You access the Nigerian Revenue Service, previously known as FRS, with your TIN.
Okay. Thank you very much. Thank you very much for this clarification. So do you have any other question?
I think somebody dropped a question in the Q&A section.
Okay, let me try.
So the person said, if I register a new business, but I've not started making money from that business, will that business be taxed? Number one. Number two, can I and my spouse claim rent relief? Okay. And then, can company pay HMO and group life insurance be recognized as relief? Okay, firstly, from the third one, no. NHIS is the recognized relief. Then, can you and your spouse claim rent relief? Yes, but it's going to be very difficult, because let's say your rent is 750,000, and then you've claimed it. The receipt and the info is already with now somebody else is coming to claim it. It's going to be very tight. And those are the gray areas that we are still working on. It's a very gray area, very, very gray area. Because two people can use the same receipt. Will we claim the same amount? or will we split it 50-50? It's a very gray area that we want to see how they want to do. Although currently the LRS are asking for the rent receipts of employees. So you submit it to your employer if you want to claim it, and then they might also ask for other details, like your owner tax ID and the like. So if you can have them, you submit it to your employer. Of course, your relief will be granted to you. And if you want to do it, you do it now. Because one of the compliance that I mentioned earlier is the annual filing. Every business must file annually. Annual filing is even still easy on your company. It's everything they've done in the past, all the payee they paid throughout last year, they have to do the annual filing for the company. So I'm saying this for people that have businesses. So you have to file annually for all your employees. You file this January. You have to pay. You have to file rather, and then you have to file projection of payee. So you know, okay, this year we are already starting with 10 staff. We file projection. So if you are going to increase salary this January, you already file it. If you are not increasing, of course, you can increase within the year. It doesn't matter. But you are filing a projection that saying, okay, this year, the minimum amount of payee my that I will be paying on behalf of my employees. And in the process of filing that projection, if you are going to claim rent relief, it already has to be deducted from your from your gross income, so that we can get your taxable income and file the right payee amount for you. So if you want to do that, you have to start the process now. Meet up with your company and then let them see how they will go about it with the LRS for you. And then if you register a business but you've not started making money from that, of course, your business is not taxed. Like I said, your business is taxed on profit, not on income. But another regulation, I think, with the CAC, you have to register with if the company limited by shares, you have to register with the FRS. And you also have to register with the LRS if you have employees personally. If you don't have employees, you still have to register because you'll be paying personal income tax on yourself also. So you have to register with them. You have to um, you have, of course, you have to register with them within 6 months. So you have to register with them. You have to also file annually your income. And like I said, if your business income, and by income I don't mean profit, I mean revenue. If your revenue, your sales is less than 100 million, you are not bothered about any CIT tax. Of course, you'll be bothered about payee and all those ones, your personal income tax and the like. Also, you are not even expected to charge VAT. If you are a small company, you are exempted from charging VAT. And one of the main reasons for that is so that you don't tax your customers. So if your income is less than 100 million as a business, there's no business with you charging your customer VAT. I think I saw it somewhere where somebody was sharing a receipt with me, and the person was saying, why is this person saying VAT on sales of shoes? The person is a online business person who sells shoes. You're not making 100 million sales in a year. Why are you charging your customer 7.5%? Now, if you now charge your customer 7.5% and you don't remit it, you'll be penalized. And I even think some of those penalties come with jail term of 6 months. So you're not expected to be charging VAT. You're not even expected to be withholding tax. So if you are dealing with a supplier, you're not expected to be withholding tax as long as the transaction, I think, is below 2 million naira. And that's where to be withholding tax. So all those things, they matter when dealing in business. So of course you will not be taxed as long as you are not making money. And even if you start making money, if your income is less than 100 million, your tax is 0%. Although you are expected to file your annual statement, but it is not mandatory that it is an audited financial statement. but you are expected to file your financial statement every year. You are even expected to file on the platform, even though you are not going to pay any tax. So you are expected to comply, even though you are not paying any form of tax. And when you meet up with 100 million, if you are not making profit, you are not paying anything also. So until you make profit, thank God the minimum tax of 0.5% of your income is out of it. So that's basically it. So I think I've answered the question.
Sorry, thank you. Can I still say something? I'm the one that asked the question. Good evening.
Yes, you can.
Okay. So I want to describe what I meant very well. Okay, so I have
Okay.
a business I I want to do. I have a business. As at last
Okay.
year, I was doing the business but as a side hustle. And then from this year, from sometime last year, I changed a job and got busy with the job and have not, done that business for more than 6 months. So this year, I don't even see myself going to that business because I have a very busy schedule. So in this case now, this business is not running, so to say. And obviously there is no income, there is no revenue. Would that business be taxed? And then you made mention that I'm supposed to file because I have to pay tax. In my employed job, I am paying tax. Am I still going to pay tax for my business, which is obviously not even running yet?
If your business has been running before and it stopped running, you are expected to file your financial statement on each year. It's not even on the income. On each year, you are expected to file your financial statement with the relevant tax people every year, whether it is active or whether it is not active. And it doesn't mean if you file zero, it doesn't mean anything. You didn't make any income. That's the way it is. I think we have clients like that who they are not operational, but they did not close down their accounts with the tax people, and that's because they are deal on contract, so they can get contracts anytime.
Okay.
So for the past 2 years, we've been filing zero revenue for them,
Okay.
and we submit their audited financial statement to the FRS,
Okay.
which is the compliance. So if your business is not running, you still have to comply.
Okay.
Yes.
Then am I supposed to also pay tax as a business owner while I am paying my payee in my employed job?
Yes. If your business is making money,
Okay.
you are expected to pay tax on every income,
Okay.
whether you are an employee who has a business or you are not an employee but you have a business. Every single income, you are expected to self-declare it. That's what they were saying when they were saying, oh, we'll go and self-declare ourselves with the tax people. So you are expected to. So if your business, please, can I ask if your business is registered as a company limited by shares or business name?
By shares.
So if your company is registered as a company limited by shares, then you are
Yeah.
dealing with the FRS,
Yes.
which deals with companies, and then you
Okay.
file with them. Of course, we've talked on those one. Now, if your business is paying you any form of money, you're
Mm.
supposed to declare that income and pay the tax on that particular income.
Okay.
But for now that you said your business is not operational and anything, of course, there's no income
Yeah.
to declare. But with the new Tax
Okay.
Act and the JRB and everything they are doing, there is free flow of
Mm.
information between the NRS and the state revenue services. So I will be I'll be
Okay.
very certain that they know you have a company.
Okay. Okay. The final question I
I'm listening.
Okay, so the final question I want to ask, you talked about withholding tax, that any business or any service provider who does not who does not make up to 100 million cannot pay withholding tax or charge VAT, right? I don't know if I got you clearly. Hello, I don't know if you heard me.
Can you hear me?
Okay, I can hear you now. I don't know. Did you hear what I said?
You can reiterate your question.
Okay, I said I heard you mention that any service provider or company that does not uh, make up to 100 million cannot pay a tax VAT or pay withholding tax. Is that correct? Okay, so I have a situation at hand. The company I work for engaged some service providers for a particular job, and we are charging them withholding tax, and they are insisting that they are not obliged to pay withholding tax because they are not employees of the company. We try to explain to them that it's not payee, it is just withholding tax as mandated by the law, and they are still insisting that they cannot pay withholding tax. So does that mean that they're actually exempted from paying withholding tax because they are service providers, individual service providers who don't have a registered company? They are more or less like engaged as ad hoc staff.
I don't I don't fully understand your question though, because withholding tax is let me explain how withholding tax works. Withholding tax is not an extra tax. It's just like you're paying your the tax you should pay later in future because you can claim it back on your CIT or tax liability in future. Now what happens is, let's say I meet your business now. Let's say you supply equipment. Said I will enter a contract that you supply me an equipment worth 10 million naira.
Okay.
Because you are a company, I'm expected to deduct 10% of the amount I should pay you. So instead of me paying you 10 million naira, I'll pay you 9 million naira and pay the government 1 million naira.
Yes.
So it's not that when I give you an invoice, I will now say, okay, that I'm paying you 10 million and then you now pay me money back. No. If these people, so if you are talking about ad hoc staff,
Yes.
if ad hoc staff is a contract with a company, let's say,
Yes.
example, security company,
Yes.
and your own company falls within a company that can charge withholding tax.
Yes.
When you are paying the company, you deduct the tax and
Okay.
remit it. But at the
Yes.
same time, the moment you are deducting the tax and remitting it, you let them know, okay, we are sending you 90% of the pay, we are sending 10% to the government. You collect their tax ID or
Yes.
their TIN because they are remitting to
Yes.
FRS. You collect
Yes.
their TIN and input it when doing your tax, when you're remitting the tax rather, so that they
Mm.
can claim it. It will become a tax
Okay.
credit
So what
for
if they
them.
don't have tax ID?
Claim
Okay.
against their payment.
Okay.
That means now you're dealing with an unregistered company.
Yeah.
But now I'm not so sure about the law, but I think sometimes towards the end of last year, they were talking about penalty of dealing with unregistered companies.
Oh really?
Because when you're dealing with unregistered companies, you can't tax them.
Oh really?
Not that you can't tax them, like it's not really traceable.
Okay. Okay. Okay.
Yes. So let's say you withhold this now, how would they get the credits back? And then if you get to a point, if you don't withhold it, and
Mm.
the contract, let's say, when you are doing a tax audit, of
Yeah.
course, no question.
Okay. It's clear. All right. Thank you.
Okay, thank you very much. Before we round up, I would like to hear one or two things from our daddy,
Doing
Mr. Adekunle Adeyemo.
deals with registered businesses.
Thanks so much. Let me thank Bright Charity for a well job done. Honestly speaking, you have loaded him to an extent that he has taken his master's course in less than 1.5 hours. And I can tell you for free that he has done so well that now depends on how you can quickly assimilate all what he has taught tonight. If you have hired him to come and give you a facilitation like this, I don't know how many dollars you are going to pay to him. However, there are some little clarification that I need to quickly push in. Speaking to the last speaker, I mean the last questioning, when she was asking about if as a company, what the payee law says is that yes, you are in employment, but the system recognizes that you earn more than your salary. You have further income that you generate. So if you are a director in any company, and that's the reason, if you look at Form A from LRS, it's talking about your salary and other income. This income could be from rent. If you have a house that you are collecting rent, if you are a director in another company, or you have in an investment that you are collecting interest. So all this has to be your global income, and it must be put in addition to the salary you generate. So how do they do it? When you pull all these things together in that form that you are going to fill, aside your salary, you will now remove the already paid payee that you pay. You deduct that from the total tax liability, and you pay the net in addition to the payee that has already been remitted by your employee. So we must understand this. That is what the law says. But the law has been very silent all this. In the years back, I remember when I used to be a teacher, they normally give us form at the end of each year. We do tax returns individually, and that's tax returns because we don't have any additional income. It will be nil. And if the government find out that we have been overcharged by tax, they give us tax rebates or what they call today tax credits. So on that note, then there are some other things that I want to quickly look at it. When the Bright Charity was making reference to residency, the determination of residency of a particular person for personal income is that that person in question must have stayed in Nigeria for nothing less than 183 days. Once you stay 180 days, you are still not a resident. But once you stay up to 183 days, you become a resident. And that means your income in Nigeria will be subject to tax on that note. Until tax came in as we lack data in Nigeria. And you all agree with me that collection of data in Nigeria has become an issue. And so when you go to taxman or tax authority, and they could not really they cannot see how do you generate your income, but you have traveled to UK twice in a year and you are saying you don't have money. So how do you manage? And you don't have children that has bought tickets for you. So what do? They will ask you to bring your statement of account. And by the time they look at your statement of account, they will see so many things. They have a data mining department in Federal Inland Revenue, and even the state can access your account through your BVN, though it negates the law of privacy as far as banking system is concerned. But notwithstanding, we are getting there now that your information will be available through different media. In mention of appeal, yes, appeal has to be done, and the new introduction of obus, tax obus now, has created an avenue for simplicity. This body, representatives are chosen from geopolitical locations in the country. We have 6 political zones. Representatives are chosen. This body, you apply to them, you appeal to them without paying any kobo. In the past, we have only tax appeal. If you are going to go to tax appeal, the tax appeal will expect you to pay a minimum of deposit of the tax in question that you took to them. They will expect you to deposit 20%. But many people are not given this opportunity. They don't even have the money to pay. So it becomes a problem, and the case will take a very long time. But with the introduction of obus panel now, you discover that because it's a free access, you don't pay money. There's no way we go to tax appeal without hiring a consultant or a lawyer, because taxation is law and law is taxation. So in that sense, what do they do? So it betters the taxpayer's position by making sure that they have justice and they have a listen to. And like rightly said by Brad Charity, if all these avenues have been exploited and you did not agree, you can still go to court, because court will be the last arbiter of your case. Then on the minimum, he made mention of the minimum compensation. Yes, it's 50 million. So certainty, he has to know, because he said he was not sure. It's 50 million. But once it is above 50 million, there will be tax charge on it. So in all, I can assure you that he has done justice beyond expectations. That is my assessment. And I thank him so much for enlightening us tonight. You will be surprised that I join you. Learning is a continuous process. If you don't learn, you become expired. And that is just the truth. And the only way you can be inspired is to learn every day and renew your mind and everything that you need to do. So let us keep on learning. It is not always, it has taken us a very long course. I'm telling you honestly speaking. So it's a learning process. If you have anything to do, it's just like what he was making reference to as far as your payee. There's a problem entangled now. When people go to JRB, that is Joint Revenue Board now, you will be asked to click their website. You generate a thing, right? That thing cannot give you a leverage in Lagos State. You have to go to a LRS office for them to generate PID for you, and that's personal identification number. All these numbers they are giving will come to align, but not now. That's what I want to emphasize here, and that's what Brother Lola was trying to say. Once, because that thing, if you understand it very well, thing cannot give you tax clearance in Lagos State. That is a fact. You have to register with LRS. When you register with LRS, because there are a lot of information that will be required from them, all those informations will enable you to have tax clearance. In actual fact, why is JRB, Joint Revenue, Joint Revenue Board, are they coming up now? Is to stop nonsense of you obtaining tax clearance in Lagos State and go to Kano State when you get there and you obtain tax clearance again. Once you obtain tax clearance in one state, is enough to serve you around the whole country. You can't be charged double tax in anywhere. So all these things are things that is going to take shape, but not immediately. And that's what we need to really understand here. Then on the final note, for foreign income generated, if the income you are earning in Nigeria, for instance, some of our youth and are working online. If you are earning salary here and your employer is in overseas, meanwhile, in the country where you are collecting the salary from, your salary has been taxed, and there's no taxation treaty between Nigeria and that country, you will be subjected to tax again. That's a fact. But once there's a tax treaty between Nigeria and that country, you will be exempted, because that tax treaty is to avoid double taxation of your income. So that is what we need to really understand. Some of us that want to work for countries, if you work for UK now, UK has a tax treaty. Canada has with Nigeria and many other countries like that. Once you work for them, even if you go to tax office, you will be exempted from paying additional tax again, because your salary has been taxed at the source, and you must have evidence to prove it. Once that is done, you will be clear. So I thank the Bright Charity so well, and the youth that has brought this program to play. And I think it is a laudable one. And I pray that God will continue to enrich you, Bright Charity, knowledge, wisdom, and understanding, so that you can do better. And I would like you to continue with your professional threshold, so that in no distance time, you become a perfect champion. Thanks so much for the audience, and God bless everyone.
Amen. Amen. That's the word. Thank you. Thank you very much, sir. Our able fellow. Thank you, Simeon, and sincerely, you actually break it down, having this in mind, even myself, even though I'm an echo student back in school, but this session actually bring clarity. Thank you very much. Thank you very much. And I also believe every one of us here have actually get value for our time tonight, which is very, very good. Thank you very much. Pray that may God continue to bless you in Jesus' name. We hope that when we call you next time, you will be available for us. We are very, very grateful despite the short notice. Thank you for yielding to our call. I also want to thank Adekunle also for helping us to follow up. I think she had to talk to you first. Thank you very much, Adekunle, and our able program planning chairman, that's his IBK. So that will not just waste our time. So thank you everyone for joining tonight's session. Like I said, this webinar is our monthly webinar, and it cuts across finance, career, total relationship, social, political discussion. Thank you for joining us, and a big appreciation once again to boss Mr. Simeon. Thank you, Mr. Adekunle Adeyemo, Daddy. We are very grateful, sir. You're always there for us. We appreciate you. You have to even stay away for us to be among us tonight. And I also learned something from you also. Learning is continuous. Learning is continuous. Despite your vast knowledge and the over 30 or 40 years experience in finance, yes, you still going to learn from us. Thank you very much, sir. And thank you for everyone. I got some people who are not our members of Faith Baptist Church Ikorodu Youth. We want to sincerely appreciate you also for joining this webinar. Thank you very much. God bless you in Jesus' name. So I want, as we round up, I just want to share the grace. I know you not start a prayer. I just want to share the grace at the count of 2. 1, 2. By the grace of our Lord Jesus Christ, the love of God, and the fellowship of the Holy Spirit abide with us now and forever. Amen. Amen. Thank you very much, everyone. Do have a wonderful night rest, and please pay your tax. Pay your tax, oh, pay your tax. Thank you. Good night, everyone.